even yesterday, I'll break down yesterday's price action. Good trade yesterday, just bad price action. That's not something we can control. So in other words, we had Friday, which held as demand, and then we had Thursday, yesterday, right, which held as supply. And what's interesting now is that this key level again is holding today. So I'm a little bit hesitant to take trades. Actually, I'm going to throw this out as a question. Why do you think I'm hesitant to take longs if we break above? Why do you think this is a bit meh? I actually prefer to take shorts from here. I prefer that. Now, of course, the market can do what it wants, but who can answer this question for me? James, in particular. I want to see your response to this. James, or anyone really, feel free to. Okay, we got some new people. Sean, hope you're well. Uh, Tell me why I am reluctant to take longs from here, because we spoke about this in the class the other day, right? So this is a key level because of what I've been through, because of what I've just been through. Why do you think I'm less inclined to take longs from here?
Because we have our weekly open that is below, and we're longs, and it's also because we are in premium. Um,
So
so the move has already really happened,
so this
and
is
so we would just be getting the end of the move.
this is the weekly opening price here.
Yeah.
So we are above the weekly opening price. So we ideally want to look for shorts. Is that what you're saying?
Yeah. Yes, and you're also above the 50%.
You're not actually above the 50%. You are right in the sense of we are right at the 50%. Do you see that?
Oh, yeah, and you don't want to trade
You don't want to
at the
trade there.
50%.
Yeah, yeah, because
Okay.
you don't want to trade there basically. So I'm more inclined to take now. When I say I'm more inclined, I'll do whatever the market tells me to do. I'm not going to sit here and predict candles and force my worldview on the market. That's incorrect. What you want to do is you want to do this, right? So this is what a pre-market game plan looks like. So this is the reason I want to do these sessions, right? So having a pre-market game plan tells you everything you need to know. So a couple of things. So we've done our structure and we understand, are we in bullish or bearish structure overall? So we're in bearish structure because we got low, low, right? So we're in bearish structure. Can we see that? Hopefully we all understand that bit. Now, by definition, we would also have a bearish dealing range. So our dealing range is bearish too. Now I get questions about the dealing range, but the dealing range is nothing more than this entire section here. This is the dealing range right here. So anything in between is a dealing range. Anything outside is not a dealing range. Okay? So we need our structure, we need our dealing range. We then need to understand where our key levels are. So there are multiple key levels. I mean, there's also one just off the top of my head. This is obviously a naked chart. There's also a key level here as well. So 15-minute fair value gap. And it's the same concept as this key level down here. We're drawing these levels because they've had reactions, right? Because the order flow has confirmed their reactions. So your pre-market game plan needs to look something like this, right? And also, because we're in the discount, I would also want to be interested in this area, which is where I was trying to target yesterday. So yesterday, it was a very simple move. I was trying to target here down to here. My goodness, did we have a difficult time in this chop? But that's not our fault. That's not our fault, right? We have our levels, we execute accordingly. It doesn't really matter what the outcome will be, if that makes sense. I know it sounds weird. We can't control the outcome. We can only control our plan and inputs. Something to pay attention to.